All right, what is up, tycoons? What's up, traders? Super excited for today's video. What we're going to do is we're actually going to take a look at Geek real quick, and then we're also going to take a look at Velo. So we'll break it down by going over the last video update I did on these and some of the key patterns and charts and levels that we were watching, how they played out, and then we'll take a look at the current setups as well. So make sure to smash the like button, subscribe to the channel if you guys are new. And just to let you guys know, these two are actually viewer requests, okay? I do these viewer requests every single week. So if you want to see your token, your crypto in the next video, all you've got to do is comment down below and I'll be sure to get to it as soon as I can. All right, now with that being said, we're going to go ahead and hop into the video. But first, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. I'm not a registered financial advisor or broker. All right, trading in stocks, bonds, commodities, cryptos is very risky. It involves a significant risk of loss and is not suitable for all investors. So make sure to read through the full disclaimer. All right. And we're going to go ahead and actually jump right into the video. So the first one that I want to go over and start highlighting is going to be Velo. Geek, actually the Geek token. So we'll go ahead and take a look there at Geek real quick and go over, what we were looking at. We had our breakout level of here, which is our most recent high. And we were looking to see if we were going to be able to get a bounce off of our major support levels of retracement. These are the three major Fibonacci retracement levels, the 38.2, 50%, and 61.8. And you use these to identify trend continuation, right? So if we bounce off of these and continue going upwards, then that's going to be a little bit of trend continuation. And if we come up, consolidate, and break below these levels, then that's going to be signs of a reversal, right? Because nothing moves in a straight line down or in a straight line up. Rather, you get a move up, retracement, continuation of that trend. All right. And that's why we use the Fibonacci retracement levels, or you get a move up, retracement, consolidation, and ultimately you break below those retracement levels. And that's how you can spot a potential downside reversal. Now, we also use the MACD, and we were looking at the MACD and had some questions here as it was starting to curl up, and we were wondering if we were potentially going to get an entry signal off of the MACD. Now, to use the MACD to spot potential entry and exit signals, you want to pay attention to the red line here. And once it crosses down below, that's typically an exit signal. And you can see we got the MACD crossover right around this area of 16 cents, and we pushed down all the way below 10 cents. Right, so it was a very good exit signal, right? And we were looking to see potentially if it was going to curl above. When it curls above, that's potentially an entry signal, right? But rather we saw it curl up and then ended up curling back down, and we broke below our major level here. But when, the big thing is we want to, break down, flip it to resistance, and then continue lower. And you can see we actually, we broke down below it, but we pushed right back up above it. Now, when it comes to Velo, okay, we had a couple different scenarios setting up. We had an inverse head and shoulders indicated by our left shoulder, our head, and our right shoulder we had forming at the moment. But I also highlighted that, hey, I don't really love this inverse head and shoulders. We also have a triangle pattern here. And if we break this right shoulder and essentially break this trend line right here, most likely we were going to come back down towards that 0.0055 region. And you can see we are heading towards there now after breaking the trend line. And look at how clean and textbook it was, right? We got a break, retest, the daily candle closed exactly there. The next daily candle opened exactly there. And then we pushed down below. All right. We are also looking on the MACD to see if this was going to curl up, potentially give us an entry signal, and that would have, helped to play out the inverse head and shoulders. But rather, it just came up there and curled back down. All right. So what we're going to do now is we're going to go ahead and hop into the Geek daily chart. This is the current setup. All right. And what I'm currently looking at. And so if you see here, we actually have a little bit more structure now. Okay. Now that more time has played out, we are trading in a bearish channel, right? And so this is algorithmic selling. These channels are very algorithmic. Whether you believe it or not, about 70% of trading is done by algorithms, not only in the cryptocurrency market, but also in the stock market. Okay, so algos are very relevant, very prevalent. All right. Now, I mentioned that these are the three major retracement levels, okay, the 38.2, 50%, and 61.8. They are the three most common and well-respected, but there are other retracement levels of support as well. And so to update the chart, since we actually broke below our 61.8, even though we just broke below and went back above, I went ahead and added another one on here, just another major level of support for you guys. 0.08778. All right. Now, when it comes to this bearish channel, all right, we identified it by the 4 touches it had on the top. You can see right here, right here, right here, and right here as well. So it's touched the top and it's touched the bottom of this channel twice. All right. So ultimately, we are in a bearish channel and there is algorithmic selling happening in here. And what we're going to see is if we can get a potential breakout of the channel. Otherwise, most likely it's going to continue taking us lower and potentially even break our 0.08778 support level. So pay close attention to that. Now, we did not get the MACD crossover here recently when we were looking to see if we are going to potentially bounce and move up, but we did recently get a MACD crossover here. And that also coincided with the breakout of this falling wedge indicated by this trend line here and this trend line here. So you can see price action was zigzagging in between here. All right, we started to get a nice little bit of momentum and we're looking for a break, retest, and push up higher. And that's exactly what we got, as well as a MACD entry signal. And just before that, we were actually oversold on the RSI, right? This dotted line right here is 30. That's the technical definition of oversold. So you can see first we went oversold at this point in the time, and then we got a MACD crossover, and then we got a breakout, retest, and push higher. So, that was a really good trading opportunity, but there wasn't enough momentum to really break us out of this bearish channel or break us out past our 50% retracement level, which is now a major resistance we keep rejecting. We rejected about 4 or 5 times over here on the daily chart, as well as most recently that level is 0.12309. It's going to be a big key area to watch out for. Currently, we're trying to test 0.1073 as support, and we're going to see if we can maintain support here and potentially break out of this bearish channel. Above 0.123, we have 0.13887 is going to be another major resistance level. And if we can get above there, right, the next real breakout level is going to be our previous high. And if we can get above that previous high of 0.19004, we do have the possibility of hitting 0.207 as well as 0.23604. Those are going to be our bullish price targets to the upside above our breakout level. But as I mentioned, there's a lot of work to be done. We have to break out of the bearish channel. We have to blow past our major resistance levels and ultimately make it all the way up to our breakout level. Before we can even have any chance of hitting the bullish price targets. So keep an eye on the MACD. All right. As I mentioned, when this thing curls down below that blue line, that's been a pretty nice exit signal multiple times. So if we don't see momentum continue to bring the MACD up, we could end up seeing another crossover to the downside, and that may potentially be another exit signal. And keep an eye for any oversold conditions. Just because something goes oversold does not mean it can't go lower. But as a general rule of thumb, that's when people start looking at potentially buying something, is when they're in these oversold conditions to potentially play a bounce, right? As I mentioned, there's no guarantees that it won't go lower, but it's much better than buying something when it's overbought above 70. All right, now this is Velo's current daily chart setup. I mentioned, we had that possible inverse head and shoulders. You can see here on the MACD, we did get the crossover to the downside. And then we, broke that trend line, retested it, and pushed lower. If I move my big old face real quick, we can see that actually we have a slight bullish divergence. So if you're not familiar with that, take a look how we have a low right here. And currently on the daily time frame, we're creating a lower low. So the token is slightly in a downtrend here. But when you look at your RSI, we have a low and we have an equal low here currently at the moment. All right, meaning that we've held and maintained relative strength, even though the price of the token has slightly gone down. All right, now, if we break this, okay, then there's a strong chance we're going to drop down to our 0.005512 support level. Okay, and ultimately below there is where we're going to be bearish and look for some type of a reversal, as these are the major Fibonacci retracement levels, right? We had the very strong push up. We're retracing and we're looking to see if we can potentially hit our bullish price targets. Rather, we got a breakdown and retest of the triangle pattern, and we're attempting to find some support near our major levels. You can see we consolidated for a strong period over here, built up a little bit of demand in this region. Let me go ahead and draw that for you guys. So there is a little bit of demand here in this region, between 0.0055. All right, but if we come down and break through this level, there's a strong chance we're breaking through that slight bullish divergence there, and most likely we are going to retest some of the previous lows that we have on the chart, potentially even down to 0.003. So Be prepared for these scenarios. Pay attention to the key levels of resistance and support that I gave you guys. Hopefully you can learn something new from this video and start, practicing using some of these instruments on your own, right? When it comes to the MACD, when it comes to the RSI, even the Fibonacci in simple chart patterns such as triangle patterns, wedges, inverse head and shoulders, things like that. They really will help give you an edge. Trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal, and you need to know how to use those weapons properly so that way you can increase your odds of success on the battlefield. All right. Make sure to smash that like button, subscribe to the channel if you guys are new, and I'm out.